morning, good early morning. Okay, let's see what we've got for Cony and Misty. We're into our last trading day of the week, so we'll find out a lot on our weeklies and in a few situations on the synthetics as we get closer. Let's start with Cony. Cony had two trades. So they added to their synthetic. Whoops. Let me get the 250. So they added 730 contracts. They bought a call, sold a put. Since they're above the money, they weren't able to make money, right? When they're right around 250, typically they can make money on this trade. This case, they didn't. They spent 1431 and collected 601 for 730 more. Let's talk about what happened yesterday before I cover the other weekly call that they sold. Okay, so yesterday we were up 4.79 in coin, the underlying asset, right? It moved from 250 to 263.01. So remember, our synthetic's right at 250. We were up in Cony 3.06, so 3/4 of the move. And that happens when we've got all these weeklies. So we'll review those in a second. So back to the synthetic. So what else does that tell us? That tells us that as we moved up above that synthetic, if we were to close that out right at the moment, we would collect 23.79 million. Now it's possible they roll that synthetic today sometime and then launch a new synthetic further out, because as you can see, there's very little premium. As long as it stays at 260 or above, this premium's going to be almost non-existent. If this thing rolls back into the low 250s, they might wait till Monday, but I have a sneaking feeling they're going to roll this synthetic, right? So they capture this money and then put on one out into May sometime, right? Usually 4 to 5 weeks out. So let's cover, we talked about what actually transpired there. The other matching, right, they typically do the same amount of contracts. So they bought a call, sold a put, that's your classic synthetic, same strike price, the 250, same expiration, 419. So since this is the last trading day, yesterday they had sold a 262.50 for $6. So today they went out. Let me mark this one because we're going to come back and talk about these and what they, well, not as critical as the ones that expire today, but they got $4.35. So between 302,000 and 317,000, they collected those in premiums. But honestly, those are pretty tight. I mean, with 5 days next week and 1 day today, those are only 4.59 and 5.51. So they're not seeing a takeoff, right? So they may wait another day into next week before they roll that synthetic. So let's go look. Not a whole lot went on with the cash position. Just move some cash around. It's funny how they play the cash game, moving it from bucket to bucket. What did they do with shares? I think they added 75,000 shares. So Misty added 25,000. Cony added 75,000. So not much really movement there. It was generally an up day. So let's take a look at the active. So what do we have as we go into this last trading day? Again, I put these twice this way instead of just writing 16,420 because they sold them at different prices, but everything is out of the money. So by moving up to 263, this 257.50, and then you have to count what we sold it for to know the real break even, right? So let's take a look at that. So we may not make anything at all, and I'll show you that in detail here. So let's only focus on these guys, right? So we sold 15,875, which is the majority, right? That's over 90% of the weeklies. So we sold it at the 257, we collected $5. When you add that together, you don't want to be 262.58 means we don't make anything. We took the 8 million away that we collected, right? We really need to be at 257.50 and collect all $5.08 on this to get 8 million. At 262.58, we give back the 8 million. For every penny over, we start losing money, right? So let's look at that and what that means over here. So that starts to take away, look at it on our payment side. We're showing this net income. Well, that's not income when your final accounting settlement says it's not, right? So this 8.8 million, 8 million of that is setting in that one, or 90% of it is setting in the one. The other one isn't even, is favorable, right? The other one we sold 257.50 and only got 299. So sorry, when I was moving tabs, I wanted to show you something else. So we need to be right at 257.50 to capture this, all this money, really, this 8 million. Some of the other money was already collected in these ones for next week. That's why the total shows that. But take a look here. Whoops. I want to show it. Why do I? Oh, I wanted to show you this, right? So we moved up. Cony closed at 26.96. Coin at 263. Do you see that now? We wrote 257.50s and we collected $5, right? $5.08. So that total 262.08, right? 262.58. So we're so close. What we would, you know, and if we, let me give you a couple scenarios on whether, how much we make. I mean, 8 million is a lot to make. So when you go over here to this tab, if we just go to 259.50 and at the end of the day we buy it back for $2, right? We collected 5, so that's 40%. So we would lose 3.2 million, but we would still collect 60% of the 8 million, right? So we pay 3.2 but get to keep 4.8, right? So it's every little dollar as you go down here. Like if this thing opens up and just were to drop in the first hour or two down to 251 or 252, they should go out and pay $1 or $2 because you don't know where it's going to end up, and just grab it back and get as much of that 8 million as you can. Because if you wait till the end of the day when it dips down and you don't, you take your chances, right? Now, granted, they're setting on this gain, right? For every dollar this goes down over here, as long as it stays above 250 by next week, or if they want to roll today, they need to be above 250 if they're going to roll it today, because this will be down to $1 or less, right? It'll just have time premium, just like it has now. As of yesterday, it has $4.97 time premium, because there's no value in it, right? It's not to 250, so there, you know, there wouldn't be a put financial transaction. This is going to go down, right? Right now it has 13 in value from 263 over 250. But $5 is the daily premium, which is just about $5 in both of them, right? So that's the extensive. When you have an implied volatility like these funds have, look, of 93.73. We went sideways in implied volatility, but we moved up in both of these pieces. I'm not particularly happy with these. I like the 277.50 much better they put on today, right? And the 262.50 is already underwater, and that one's for next week, right? But these aren't the bulk, right? Once they roll out of these, they're going to put thousands on, right? And hopefully those are much higher. These are 500 and 730 in value. So, you know, we've got 23 million in a gain. On one hand, you don't want this to go down, but you don't mind it to go down to, I mean, I'd love it to go to 256 or 257 here for the day. Don't roll this yet, and just, you know, take all your money or buy it back for 50 cents and you got $7.50 out of 8, right? So you would have picked up 95% or so of the 8 million. That's what's important. Okay, so I think I covered that. Let's look. We'll go to holdings, but I'll go over payments. So this 8.8 million is counting that 8 million. It's counting the calls that we sold and collected the money for next week. I'll show you those again on the April tab. And the synthetic is what it is. We're losing money on the synthetic because of the additional buy we did today. It was a negative buy because we bought more than we sold the puts for. But we still got on the books, we've got the cash on the table, right? So that's attractive. Let's look at the April one more time. So here's what we've got for next week. See, these don't, when you've got 8 million in one trade, it matters a whole lot more. It's like 12 times what these two individual, this is 600,000, right? So when you got your bulk of your money, you got to play that really smart today. And sometimes these guys don't. I mean, I've seen, I talk about an opportunity in MSTY where they sold something for $7. They could have bought it back the day before expiration day for $1. They chose not to, and it took off, and they paid like 15 to get it back, so they lost 8, right? They sold it for 7, bought it back for 15. They could have bought it for $1, which is, 85% of the $7 they sold it for. So sometimes they make mistakes. I don't know if it's just too busy doing too many funds or exactly what happens, but that's shareholders' money. It's really everybody's money. I like to optimize that, especially if you understand it really well. They are banking on these synthetics, really bailing them out, but you still want to make it on both sides. Okay, let me show you. I showed you payments. Let's go to holdings and see if there's anything else. So here's that reflected again. Since I updated this, I got the synthetics lined up, right? You can see that it's 24, and actually with the hundreds, it's 23.7, right? Difference. Here's the 75,000 shares, which is nothing, right? 0.46. Cash moved around, but that's not a big deal. Here's our 4 positions, right? So again, we talked about these. Here's the bulk, right? You have to pay 7.225 to buy those back right now, and we only wrote the calls for $5, right? And now, granted, they got a little bit of time decay. We're at 263, so it says that they got $2, in time premium. So that part would decay out, and we sold them for $5. We'd have to buy them back for $5.5. But think about that. That $5 gave us $8 million because of how many. So just buying them back for $6 or $5.50, that hurts, right? Okay. So look at next week. Again, not that much money. We don't even have $1 million. And these, which were already behind the 8 ball, right? But again, we make that up in the synthetic. If this thing runs to 280 next week, we go buy these for $3. But hey, what did we sell those for? Actually, I think we sold those for a decent price. Let me see. No, we really didn't. We only sold those for $4. So our break even on the ones we sold is 281. So it's 268 and 281. But again, we're going to have a big supply rolling out of this one, right? So whatever we close this one out at, if we make a bunch of money, then hopefully they lag into some, right? And they use different strike prices and do 3,000, 5,000, 5,000, something like that, and spread them out. Especially if they're going to be, well, the short terms, they don't, right? Every time they do a synthetic, they like to match the amount in volume of what they did with a regular weekly. So we'll see what happens. All right, let's move to MSTY. I covered holdings, I covered payments. That's the only trade. All right, let's talk about MSTY. MSTY, for the first time in a long time, had no trades. So MSTY went up down all of less than 1%, right? So 1566 to 1551. And when I talk about the weekly calls they only have 1419. All of these in yellow, and they're all staggered. Good for them. They're crossed. What are the strike prices? 1920, 1705, 1750, 1657. This one, as you can imagine, we were at 1566. We fell back. I don't mind being over this one. If we close the day at 1600 or 1630, yeah, 22 contracts are going to get hurt. We're probably going to pay, 400,000 to buy something we sold for 123. But in the scheme of the things, right? Look at all this other money we will collect, and look how much closer our synthetic will get. That's where we're hurting. Oh, by the way, so we were flat today in MSTY. So we closed 36.99, same price as yesterday. The fund went down, right? The underlying went from 1566 to 1551. So we can look at the active tab, and then I'd like to come back here because you mathematically can see the dollars, right? The active just shows you where they are and what percent out of the money. So we got 567 contracts. So again, we're down a little bit. MSTY was even, flat. Implied volatility went down. Someone would ask, well, that's 2 or 3 days in a row. Why is the implied volatility going down? Well, what happens when you take a highly volatile stock that goes up 3%, 5%, down 15%, up 12%, that volatility is what creates all of the pricing premium that they're able to generate 100% annualized, distributions, or 70% if you're in Cony. That's what drives it. So you want it to remain volatile, and right now it's in a consolidated phase. Well, let's take a look at the chart. Oh, I didn't actually show you the chart in Cony. I actually did some markings and some technicals. But, oh, sorry, I did a little bit here too. Okay, so look at the declining volume till we break out, right? So before I go into the capping and the amount of trade. So when you get high volume on this way up, right, when you start consolidating, right, on this chart it shows percentage gain because I'm comparing it to the underlying, which has only been out a little while, MSTY. But you see roughly 300% to the top of 500%. So as long as this consolidates here and the volume remains low, you're not going to get a big move. If you get a big spike down, it's going to be on volume, and if you get a big spike up, it's likely going to be on volume. Now, you'll have a rare day like this where you had one line stick through, right? But that's okay. And that probably, based on that line, that was a big up day, okay? But since then, it's pulled back. So you need something to hold, right? This is a false breakout. We will get that breakout. It's just a question of when, or a breakdown. I'm bullish. I think the halving is going to bring us. But let me show you where we need to move. This is important, guys. We stand right now down 8.3 million. So if we want to close these out, why? Well, actually, this one should be updated. 1551. I think it was 19 or something. It doesn't matter on the change. 1551.81. Okay, well, I'll make it there just to be accurate. Okay, that's significantly under 1700, right? So that's why we're setting in that. The puts that we would have to buy back if this were to stay is 1551. They're right at the close next Friday. They would be $149. Right now they're $199 based on this price because they got a 6 trading days of time premium that'll decay. So bottom line, and this is going to go down substantially, right? This is going to have zero value. The whole $52 gets wiped out. Do I think it's going to be that way? No. Is it a risk? Absolutely, it's a risk. Okay. So let's look here on the weeklies and see what we can do out of that. Because if we go over to our payments, we're setting on cash here, and we've closed some cash on some synthetics, okay? But we stand to lose 8 million, right? So all of a sudden this is -6. Who knows what happens on the weeklies? We probably will keep making money. We'll make money on these weeklies, no doubt. Maybe next week. But if we lose 8 million there, this goes in the whole, you know, by the close, 6 million, right? So we were carrying 6 million, and we've got 4.8 to pay out as it stands right now, but we sure wouldn't if we lose on that. So don't just think that these things are just, you know, a piggy bank. It's all looking good. As long as we move up on that synthetic next week, no problem, right? And it's really not that far for the movement of a stock like MicroStrategy or Cony to do. I should say coin there. All right, let's look at these. So here's what we stand to gain. 689,000. That's almost a shoe-in, right? We don't even start to lose that until we go to 1973 because we sold it for $53, which is the premium above 1920. And so that's 889. Here's 1.2. So there's 2.1 million, right? 2.15 million right there that are percentage-wise high, right? 1920 and 1705. Those are... The 1920 is 2373 in one day. There's almost no chance, right? Literally no chance. So this one, yeah, it could happen in a single day. What's the probability? I don't see the driver today to drive it to that level. So we're going to capture some money, right? And the only one that we're behind the 8 ball on, and I'm okay to lose on that one, I mentioned, is the 1530. We're already at 1551. Like I said, I'd love to see us run right up to 1635, right? Where we capture all of this is only 22 contracts, right? It's not a lot of money. And we lose on this guy, but again, it's not that much money at 75, and we win on every one of these other ones, right? So the amount of money we win is much greater than the small one at 22, or sorry, at 75. So you can see those here, right? So we would lose on 213, and we got $28. So 1559, technically, right now, if it closed at 1551, we give back some of the 213, but not all of it because we're below 1559. Once we get to 1559 on today's close, then we have to hand back the 213,000 they gave us when we put the position on, right? So that's why the math and all these calculations here and what they mean, right? This one we collected $36, so we could run all the way to 1693. But at 1657.51, we start giving back, right, this 145,000. So these are the critical ones. So we'll pick up some good cash here. I don't think there's much of a chance they roll out of that here on the synthetic. You never know with the fund managers. If they think they can bring, well, they wouldn't bring a bunch of cash in because typically they would sell the call and put at the same strike, and when they're going to go out 5 weeks, those are going to be pretty evenly matched, usually with a call being maybe a % premium over the put at the same strike price, which is the way they do these synthetics. So I really want to see them by next week erase that. So when they roll this, we'll see. I think there's little chance they roll it today. But I think on Cony, there's a good chance they roll that underlying coin one. All right, let's look on the payments. You know, we're still looking good on this in terms of, you know, cash flow. We've got this, but we'll keep this cash. Unlike Cony, who's sitting on the nice edge with that 8 million, we're going to collect ours. But Cony's got 23 million ahead of the game in their synthetic. So that's why these vary, right? They're different stories and different calculations. So This one is setting, not a whole, at least they have income on the synthetic, right? But they got a huge liability. So up 25,000 shares, 1% on that. Is there anything in holdings? So here's our 8 million shown in our holdings, right? 25,000, 1% up. Look at this, 3 pennies. We're selling for 3 pennies higher than our assets divided by shareholder equity, right? Says it's worth. They say it's worth 36.96, and the closing price was 36.99. Not much else. You see that 8 million that were hung out there, whereas Cony's got 23 million to the positive here. I think that's it, guys. Let me know. I've got a series of videos that I'm going to start putting out. And one of them I mentioned, it should be out this weekend. Everything I'm calling it everything you need to know, and 4 dummies on YieldMax funds. I really want to dive into how the funds work, what taxation is, just everything. How do you keep from NAV erosion, right? I want to just tell everybody everything there is to know about these funds at a deep enough level that you go, oh, I didn't know that, or okay, now I understand this, But most of it goes back to, if you want to just collect dividend income, make sure you have a strategy, because these are bullish bets, right? And the bullish bet is on both sides. The weeklies work okay in a slightly down to a flat environment. They'll collect you dividend. The synthetics will absolutely lose your shirt, because both positions are based on a bullish outcome. Okay, so you got a conservative slightly down, you can get some cash flow on your weeklies, but the synthetic will kill you. So make sure you're continued to be bullish if you're buying a YMAX, or you're buying Tesla or Nvidia, or the Meta Facebook one, because you want to be there. I'm bullish on Cony, and I'm bullish on MSTY with the halving and the Bitcoin underlying bull run. I see that for another 6, 8, 10, 12 months. I mean, there'll be big ups and downs within that bull market, just like this is a consolidation phase. I'm not that worried, because I know where we're going. But a lot of people chase dividend yield, or they'll run over here and jump in MSTY. Oh, did you see they paid $4? It's only a $36 stock, right? Well, it has to perform, right? And I'm bullish, so that's why I own it. That's why I like to report on it. But I love YieldMax. I love the idea of what they're doing, and they're putting it in the average consumer's hands. But I don't love all the funds right now. I have people ask me all the time, hey, can you cover this one? Can you cover that one? I have a hard time covering it if I'm not in it and not excited about it. I really don't want to talk that detail, but I have a lot of videos planned on other things that I'm buying and creating my own synthetics. And like I said, I want to go into detail on YieldMax so that people really understand them. And don't forget that YieldMax is going to have 6 new funds at some point when the SEC approves it. And I think 6 of them are single stock bear oriented funds, and there's going to be a QQQ bear fund. So I'll be all over that fund, because I think between May and September, we'll see a downturn in the indexes, and I think there's some fluff that's going to come out of a lot of the big tech stocks that have been massive runners. They'll come back, they'll do well. I think AI is for real. I think there's some positive things, but I don't want to own them during that stretch. I don't want to say, well, I collected 30% in dividends, but I lost 60% in NAV. Why do I want to pick a losing situation when I can pick a winning, or I can figure out on my own what stocks are going to do well, and I go create some of my own synthetics and write naked calls and do things like that. So that's what I'm going to start sharing as well. So give me feedback in the comments. Again, this is not financial advice. I'm not a financial advisor. This is for fun and education. Hey, have a good one, and hope we do all the things we want the funds to do today, guys. Bye.